Get off to a flying start on a Monday morning. The Nifty and the Sensex gain over 1% each, led by the financials, led by PSU, banks, metals and IT stocks, all guns blazing.
Adani stocks continue to gain anything between 4 to around 12%. LIC chairman tells CNBC-TV18 that they've met the Adani Group executives and are more confident about the business prospects of the group post the meet.
Mahanagar Gas surges on news that it will acquire the city gas arm of Ashoka Buildcon Unison Enviro for about 500 crore rupees. Brokerages give a thumbs up.
Brokerage moves hit stock performance. Britannia sees a cut of around 2% after CLSA downgrades the stock to sell from underperform with a target price of 4,060. Nika 2 trades weak after Macquarie initiates coverage with an underperform rating and a target price of around 115 rupees per share.
Lemon Tree, however, gains in trade post bullish commentary by the management on CNBC-TV18, telling that the company is expecting 20% plus growth in FY24 with an EBITDA margin of over 50%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me is Mangalam Malu. Well, Mangalam, a good Monday for the Bulls. It's going to be better for us because tomorrow we're going to be off, just come out, bat a few balls and then go back into the pavilion. So good to have a truncated week. But the markets, they're catching everyone's breath. Just take a look at that. 200 points higher on the Nifty. The Nifty Bank is well up 350 points on. And the breadth of the market is heartening. 4 stocks advancing, 1 stock that's declining. So you like what you're seeing on the screen?
Love what I'm seeing on the screen, Nigel. Probably because, 2 days in a row you've had 200 points as we started Chartbusters. And the fact is that it's sustained, and it's only growing. Let's see where it goes from here. It's been led by Nifty Bank. We have the IT index doing extremely well. Metals have bounced back as well with the stronger market breadth. And add to that, we have a holiday tomorrow. So it's a perfect recipe for a good Monday. Let's get in Shivangi Sarda for what she's made of the market moves. Shivangi, first up, greetings of the festive season to you and your family. Is the market color going to be green this Holi, and will it continue to be green?
Good morning, Mangalam and Nigel. Wish you a very happy Holi in advance to all our viewers as well. So we've seen that Nifty, there has been a strong comeback of the green color and the bulls, and we've seen that, the supports are, holding very well. And after this short covering move, we can see that the longs are being built. So this follow-up buying should take the index even higher to, 17,850 to 18,000 levels. The hold of 17,777 would be important, and we need to look at it at a closing basis as well. The support would be 17,442 for the index. Now talking about the bank Nifty, we've seen that there has been a very good support from the banking, PSU sector, PSU banks and heavyweights, and the index is trading now above its 50 exponential moving average. The put call ratio has also improved. That means that the call writers have invited their positions, and there can be good put writing seen as well. So here we're expecting the upside as well. So any declines could be bought, and we could see 42,000 levels over here with a support near 41,250 levels.
Okay, all right. Hi, Shvangi. Thanks so much for joining in. So we got the levels on the Nifty and Nifty Bank. What about individual stocks?
So, the individual stocks, I would like to talk about PFC first. The stock has been making higher highs for the last 5 weeks and holding well above its previous hurdle of 154 zones. The pace is also shifting higher with a positive divergence seen in the RSI indicator. We could see 95% rollover from the previous series, and it is heading well as we move ahead in the March series. So recommending a buy here with a target of 165 and a stop loss near 155 levels. My second pick would be from the top gainer of the last 2 sessions, which is from the PSU sector, SPI. It has given a negation on monthly as well as weekly frame, and there can be buying seen even after the price volume surge on the Friday session. So holding very well, and the derivatives and technical levels indicate a good risk reward from here as well, and a potential upside towards 590 levels with a stop near 555.
Okay, all right, Shivangi, thanks so much for stopping by. Wishing you a good Holi and a good trading session ahead as well. Well, for the time being, let's shift focus to our special segment where we get you a few ideas for profit from Moneycontrol Pro. Anubhav Sahu of Moneycontrol.com joins us to talk about a stock that is tracking rather closely. Anubhav?
Hi, thanks. So we are intrigued by a few macro developments which make us constructive on select chemical names. Firstly, European demand is holding up as per corporate commentaries across the board. The continent has been able to sail through energy crisis, which has helped downstream industries to operate. Secondly, a selective closure of German plants by BASF and opting to serve European clients from other location indicates Europe plus one is on the works. So this is supportive for export-oriented chemical companies like Clean Science and Technology, whose direct exposure to Europe is about 20% of sales. Now at the company level, key positive is the commissioning of Unit 3, meant for the production of hulls, that is hindered amine light stabilizer series products. Given further investment into this space, traction for hull segment would be a key driver for next 2 to 3 years. Among risks to watch is a pickup in competitive intensity for the flagship product MEHQ. Having said that, the company's key strength remains process innovation, which helps us garner elevated margins. Further, valuations are reasonable after substantial derating in last 6 months, and hence we are getting constructive here.
All right, Anubhav, thanks a lot for that. As we speak, 17,780 on the Nifty, the mid-cap index at 31,000. Take a short break, come back. We'll be joined by Kulwin Sira, who's the Executive Director of GNA Axles, to discuss the strong Class 8 truck orders for the month of February. Remember, they get their 50% sales from exports. We will have the management detail the impact of North American Class 8 truck sales on their business. Well, let's get chatting with the management of GNA Axles to get their view on broader business outlook, but importantly, the North American Class 8 truck sales, which have grown both year on year and month on month. It's grown by about 10% year on year and 5.5% month on month. Kulwin Sira, who's the Executive Director of GNA Axles, joins in now. Thanks a lot, Kulwin, for joining in. Just wanted to understand, a little over half of your sales come in from exports. How much of that comes in from America and how much of that comes in from North America Class 8 trucks? How should we look at this growth number in lieu of your business?
Good morning, Nigel and Mangalam, and thanks for having me here on the show. So right now, of our total sales, 55% is exports and 45% is domestic. And in that, North America has a major chunk. Basically, it is around, I think, 50% plus of 60% of the total chunk is from North America. And the rest is from Europe and South America and the rest of the world.
Okay, got it. Hi, Kulwin. Been a while since we chatted. Thanks so much for joining in on the show. Well, Kulwin, if you could give us a trajectory in terms of growth. For FY23, in all probability, I think you'll end above 1,500 crores. So what is the number you're looking at for FY23 as well as FY24? What is the revenue growth you're guiding for? That's what I want to know. And also, in the revenue, could you break it up for us? How much will come in from EV? And that SUV plant as well, the street has been hoping for a long time. What is the revenue you can generate from that particular plant? So overall revenues and split up further into EV as well as SUV. Go ahead.
Okay. So regarding this year, we'll touch between 1,550 to 1,600 crores in this financial year, FY23. And that's a good growth compared to the last year, and that's going to be around 20% growth. But in the FY24, we don't expect a double-digit growth in percentage. It should be around 7 to 8% compared to this year, because this year was a kind of a peak growth. And besides that, in the EVs, we are already contributing to our existing customers and with their new programs and growing with them with their new programs domestically and with exports. And it should contribute around 3 to 4% of our total sales as of now. It's not a major chunk. And for the SUV plant, it's both SUV and multi-utility vehicle plant for us. And because of the geometry of the parts being the same. And that will contribute in the coming year around 4 to 5%, or like around 70 to 80 crores of sales that plant is going to contribute in the next year.
All right, 70 to 80 crores would mean that it would be at full capacity, because that was what your initial estimate was. This year, I presume you would end at around 50% of that 70 to 80 crores, or roughly 40 to 50 crores in the SUV business. Now, I wanted to understand, with regards to margins, because the last quarter, your margins did show an uptick. In fact, the last couple of quarters, they've been improving from the lows because of high costs earlier. When do they go back to pre-COVID highs of 17.5 to 18.5% mark?
In terms of numbers for margins, we have already crossed in the last 3 quarters the target of the whole financial year of 22. So this last quarter is going to be an addition to it in terms of numbers. But it is going to be maintained at 14.5 to 15%. That will be the range throughout and from now on as well. So this is how it's going to be, and we are expecting this the next year as well.
Okay. So with all these new things that you're doing, EVs, SUV, etc., all that won't add to your margins?
The percentage margins will remain the same, and obviously the number of sales and the figures will grow. And that's what the target is as of now.
All right, Kulwin, this year you're going to end closer around 1,550 to 1,600 crores. Next year, you're guiding for around 7 to 8% growth, single-digit growth out there. So roughly, you'll be at around 1,750 crores. I think that's the revenue potential of the company. Could you tell us at peak levels, what kind of revenues can you do? And do you have some capex to enhance capacity such that you grow from year on as well?
Yes. So that is how the picture is. You're right. And that is at 80% of our capacity. And also we are expanding some capacities along the way, doing some new investments.
Kulwin, I didn't get that. Kulwin, I didn't get that. At 80%, will it be 1,750 crores, or at 100% it is 1,750 crores?
At 80%, because that is what you get out of a plant manufacturing facility.
Got it.
And all the investment is going to be from internal accrual so far. Yeah.
So how much are you enhancing your capacity from current levels? What is the capex you have on board, and when does that come on stream?
We are investing like this year and next year around 40 to 50 crores per year. That is the target as of now.
All right, 40 to 50 crore per year in terms of capex. Just wanted to understand, by when do you commission that PV unit of yours, which was supposed to be, a big growth driver for you? And secondly, in the other smaller parts of your business, which is the spindle and machining business, what's the capacity utilization, the operation performance likely to be there?
So for spindles, we are increasing some capacity as the demand is high. And the capacity utilization of the added capacity again is going to be between 80 to 85%. So that is how it's going to stick around. And for the SUV, like I said, it will contribute in this year is because some of the couple of programs have launched and they are going to come to the market this year. So that is the contribution for this year from them.
Okay, all right. Kulwin, you could correct me on this. 1,750 crores, you're at around 80%. So roughly, I think at around 100%, you'll be around 2,000 plus crores, 2,050 crores odd. Plus, you're putting this capex of 40 to 50 crores. So post this 50 crores capex that you're going to be doing, what is the peak levels of revenue that you can hit?
That is, again, Nigel, that is with the investments which we are doing, and investments take time to basically today we take a decision, it takes time to implement and run and to come to its peak. And with the investments we have already done till now, and with the machines coming on the way, that is the target we are going to achieve is around 8% growth in the next financial year. And that is with the capacity utilization, because you have to keep in the maintenance times, the changeover times, everything keeping in mind. So 80 to 85% is the utilization for a manufacturing plant.
Kulwin Sira, thank you so much for joining in and giving us an update on your business. Wish you good luck, and also you and your family a very happy Holi. Take a short break, come back, get you more on the markets and individuals. 100 points on the Nifty, virtually close to the 17,800 mark. That would mark a near 1,000-point recovery from the recent lows that we hit. But importantly, just watch out for a couple of stocks which are sulking in an otherwise extremely good market. That's Britannia, which is down about 2.5%, and that's primarily on account of a note that has come in from CLSA. They've downgraded the stock from sell. They were already at an underperformed rating. They've also cut their target price to 4,060 odd rupees. Why do they say that? Well, because they believe that high wheat and milk inflation will impact the company's margins. It will be interesting to see how much they do impact, because from the peak we have seen some cool off in both wheat as well as milk prices. But they do see downside risk to consensus margin estimates. While growth in FY24 will be volume-led, because the last couple of years had seen the company take a lot of price hikes, they believe that the 30% run-up that we've seen in the stock over the last 12 months limits the upside that they have on Britannia itself. As a result of which, and the downside risk on margins, they've cut their FY23 to 25 EPS estimates by 1 to 11%. That's Britannia. But the stocks, the group of stocks which continue their upward momentum are the Adani group stocks, and now they've just got a little bit more wind from the chairman, LIC chairman's comment coming in on the business itself. Yash Jain, our colleague, spoke to him.
I can only confirm that the conversation has happened with the department, but there's nothing I can state as of now on the outcome of that meeting. But yes, we have had the meeting.
Are you more confident than you were about a month ago on the business prospects, not the stock price, the business prospects?
I believe so. We are quite happy about the meeting.
Well, on that note, we'll have to wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.